All right, can you guys see the PowerPoint?
Yes.
Yes.
Okay, and all presentation view, right? Not just the slides?
Correct. Yep.
Perfect. All right, then let's go ahead and get started. First, I want to say that I'm really happy to be speaking to everybody right now. We're really lucky to be part of this event from Xero. They decided to ask us to present a little bit on cash flow and how small businesses can manage cash flow during these most trying of times. So today we're really going to run through the basics of cash flow, not kind of looking at the cash statement of cash flows and attempting to interpret that, but just common sense. What are the important things about cash flow I need to know for my business? Then we're going to talk about how to translate these cash flow inputs and outputs into ways you can help your business when money is tight, how you can start understanding and projecting your business cash flow. We're going to real quick touch on some essentials of the SBA and PPP loans, as a refresher for everybody, since that is an important factor in a lot of people's cash flow right now. And then we're going to wrap up with discussing the concept of a runway and how a runway is particularly useful, especially for people who have that big SBA loan payout they're trying to manage. Hopefully that should be really quick, just about 10 minutes, and then we can turn it over to our panel of experts who are going to continue the discussion and talk about some real-world practical examples of what we can do to help manage cash flow. All right. First, let's get started with the basics of cash flow. Cash flow is one of those things where you read any business self-help book, listen to any talk radio show or podcast, and cash is king. Everyone says that this is if you're going to pay attention to anything, this is where you need to pay attention to it. But this is an area where the reporting available to us is not the easiest to interpret. And so looking at a statement of cash flows that you pull from Xero is not, necessarily going to give you a lot of the, essential information that you're really looking for. So we're going to just real quick talk about kind of the basics of cash flow from a 10,000-foot statement-free perspective. All right. You have inflows and outflows. Your inflows are going to be revenue, of course, hopefully a lot of that, but also investments, loans, lines of credit, forgiveness of debt, increasing, payment on your AR, that kind of stuff where anything that frees up more available cash for your business, even if, it comes in the form of a loan that has to be repaid eventually, for cash flow purposes, that's going to be an inflow that, positive cash flow for you. Outflows include the obvious payroll, operating expenses, accounts payable, as well as credit card loans, line of credit payments that might not show up on your P&L, but will show up on your balance sheet as well. Along with R&D, asset purchases, you really need to incorporate both information from the P&L and the balance sheet as well. So putting that all together, you can get something like this. This is a cash flow waterfall, courtesy of Spotlight, a software we use at KH, that I think really does a good job of visually presenting how cash flow might look over the course of a year for a customer, okay? So you have your revenue, your cost of sales, your overheads. That's the common sense operating cash flow stuff that everyone's pretty familiar with. Then we have things like changes in accounts receivable, changes in inventory, where as those amounts vary, it's all about, is it freeing up more cash for the business to operate, or is it tying up more cash or spending more cash on items for the business? In this case, a positive change in inventory might mean that you've been able to move inventory or, use inventory as opposed to, buying inventory, which is kind of the backwards of how you would normally think about it. Same thing with, changes in accounts payable, changes in other current liabilities. With a positive change in other current liabilities, that's receiving additional cash via a current liability, likely in this case, a PPP or SBA loan. So it's freeing up more cash for your business for you to use. So I think this chart kind of illustrates some of the ins and outs of the different items that can go into, create your cash flow, your positive or negative net cash flow. This is something that our panelists are experts on. So if you have questions, definitely they're going to be able to kind of get into the specifics of individual transactions or individual items. So You got that information. What are you going to do with it? So you want to create, probably the most useful thing you can do with a statement of cash flows is creating a cash flow forecast. Understanding your upcoming inflows and outflows, adding a time element. So trying to figure out in what, how far away, in what horizon these payments and outflows are coming in. And then relying on historical data to try to come up with a baseline of what are my, how is my cash going on an average month, so I can use that plus my timed inflows and outflows to understand where my cash position might be in the future. So here's a basic example just in Excel. You have your starting cash balance, your incoming, deposits from sales. There's another line for equity or other cash injection, equity, debt, other cash inflows coming in there. Then you have a combination of your operating expenses, COGS, direct supplies, payroll, as well as some balance sheet items, credit card payments, sales tax, to kind of both capture all of the outflows that may be relevant to each particular month. You can see some of these items are consistent month over month, where they've been able to establish a pattern. Some of them are every so often. Some of them, are scheduled, like you can see the scheduled sales tax payment for the week of the 25th, where they know that that's going to be the outflow there. Your net cash, your ending cash balance is down there, and the difference between your starting and ending cash balance is your net cash flow, positive or negative. This kind of worksheet, setting it up on a weekly or monthly basis for yourself or for a client, is something that can be invaluable to try to help them understand and plan when to pay off AP, if they need to increase collections, how they can structure their regular monthly operating expenses to best avoid a cash pinch kind of shortage. So over here at KH Cloud, we use Spotlight reporting, which integrates extraordinarily well with Xero to pull customer data from Xero and present it in a little bit more sophisticated format. This is an example of, these kinds of things are examples of where a cash flow forecast can go. Starting off with these very basic kind of inputs and outputs, you can use historical data, seasonality, business trends over time to start really predicting on a long-term basis how your cash position in your business is going to change. This kind of long-term planning can be invaluable for making asset purchases, expanding your business, understanding if you have enough money to repay a loan, or on, how fast you'll be able to do that. And there's a lot of softwares, although we think Spotlight's the best, that can give you kind of that increased analytical ability. This is an area where, if you are a small accounting firm, it can give you an immense value add to help your customers understand this and really use and manipulate a software that's more sophisticated. And if you're a small business owner, this might be a reason to reach out and see if you can get, a fractional CFO or a professional accounting firm to help you kind of get from your very basic to your more complex cash flow understanding. So with that in mind, I think the most important element of everyone's cash flow right now is probably the PPP and EIDL loans. So CARES Act is what passed it. You see that $375 billion in small business debt right there. That's where the PPP loans came from. So PPP loans can be administered by any SBA lender based on average monthly payroll. And as I'm sure everyone knows, portions of it can be forgiven as long as you meet qualifications. The loan amounts are 2.5 times average monthly payroll expense. So for a small business, that's likely one of the biggest cash inflows you're going to get in a single month. EIDL loans are much the same. They're more traditional kind of SBA loans where there is repayment, there's not going to be forgiveness. It's more like a regular SBA loan you would use to perhaps expand your business or construct, but these are designed as income replacement. So they'll go for the months of income where you're unable, or you can demonstrate need or an inability to work at full capacity. So what do both these loans mean for your business? One is obviously the immediate cash infusion, the help when needed. So many people would have not been able to stay on payroll had it not been for the PPP and EIDL loans opening up. There are some cash flow inputs as well. On the one hand, a big deposit of cash, bigger than most businesses, cash they might see in a regular month anyways. That's fantastic. That's really helpful in the short term. In the long term, there's some negative cash inputs to, realize as well. There's going to be interest starting to be paid on these loans. They're going to start to affect your tax liability. Almost everyone's saying an increased tax liability is probably going to happen this year as a result of the deduction changes from these loans. So that's an additional outflow of cash you have to keep in mind. But in my mind, the most important takeaway here is a lot of small business owners, for the first time potentially, if they haven't gotten any investments, have an opportunity to build a runway. Runway is your cash balance divided by your monthly burn rate. What that does is it gives you an estimation of how long your business can continue at its current rate before you need more money or before you need a significant change in income or expenses to bring that balance back up to even. So ordinarily, a cash flow runway, and this is a visual example for a startup, is very relevant with a venture-backed startup where you have a big investment, their Series A, millions of dollars, and then they burn through that just in time, finishing just in time to start their Series B, potentially. But what I'm challenging small business owners to do is look at their PPP EIDL loans as a sort of runway. Keep in mind how many months of operational cash they have left in the bank, given their current level of business, to be able to plan for what will I need to change? What do I need to do in 2 months, in 3 months to remain operational? Where does Xero come in? So Xero not only has, the fantastic pure data you can use to help make these decisions, to connect to other softwares, to really, give you the raw materials to help understand this. But Xero also has a lot of cash reporting and, report building abilities to help you kind of come up with a lot of these preliminary reports. And it's something that, if you're not taking advantage of already, you should be. So now I'm going to move over to our panelists here, and hopefully they'll have, if you have any questions, give you an opportunity to ask them and see, get some answers. We only have one question so far, which is, will the session repeat itself? Which is yes.
Twice, right?
Twice.
Mm-hmm.
For anyone new entering the session is going to repeat itself. 115, 150, and 225. Yep, at 150, the session is going to repeat itself and start over again. Oh, here we go. All right. What is the best way for a startup to maintain cash flow if they're faced with a challenge like COVID?
I can take that one.
Sure.
Go for it, Kyle.
Go for it, Kyle.
So this is just one, I'm not going to answer or solve all the problems, but the big one, like Anthony said, is make sure if it's applicable for you or worthwhile, in most cases it is, file for the PPP and the EIDL loan so you can get that runway. The best way to maintain cash, because that's cash in that can be forgiven and can give you essential month, 2, 3, 4 to strategize and then maybe find different avenues to pivot. Just a huge way to help buoy your business and make sure that you've got what you need. Beyond that, the biggest one, if we're just talking about ways besides, pivoting for different revenue avenues, I would say talking with your vendors, trying to be proactive with them. I know it's hard, we're reacting right now, but if you can reach out to them, some obviously are in a tough spot as well, but some may be open if you can communicate, get on payment plans with them, for instance. That makes a huge difference. If you can expand your AP out, your accounts payable out, and grow it from month to month, I know it's kind of counterintuitive, but that's cash in your pocket. And if you're talking with your vendors and telling them, here's when I can pay you back, maybe you had a hiccup and you can say, hey, I need to push. As long as you're talking with them, I found that a lot of vendors are pretty responsive because they want to get paid just like you do. But if you can't for some reason, if you can talk to them and get a plan, they're usually responsive to that. So you can work there. That can give you another a month or so of working capital, which is really big because that's another month where you don't have to make really tough decisions. So those are the top two that I would say is the PPP, EIDL, and then work with your vendors to see if you can stretch your accounts payable out and get more cash in your pocket that way.
Ooh, I can take this one. Does Xero help with accounting functions, and can it be integrated into a tech stack like with an API? So Xero is all-purpose bookkeeping software. So if you're familiar with like QuickBooks, Sage, other softwares like that, Xero functions, has all the functionality of those softwares, but in a really beautiful format that is kind of geared towards the small business owner and geared towards being able to pull reporting and take that data and use it for all kinds of other purposes. One of the things that isn't a huge advantage of Xero actually is that it has an open API. So as opposed to needing to get all kinds of specific permissions and legal stuff to work with their accounting software, Xero's API allows for just about anybody to write and develop apps using that information, which means that the app environment for Xero is huge. There's a ton of industry specific as well as just general reporting and accounting apps that really can make a difference and that can all integrate with Xero. Spotlight, the app that I highlighted in my presentation that we use for reporting, isn't one of those. It's a great Xero partner.